Morning everybody, it's Chris here from Student Education with the 4 majors notice update for the 4th of March 2011. I'm just going to be going over the 4 majors this morning, starting with the Euro against US dollar on our CTC 6-screen strategy template. Just going to go ahead and have a look at the overall trend yesterday and see how things fared on a daily time frame. You can see how the pair took off after closing higher than 1385, or the previous resistance level. And yesterday we had a nice uptrend, very well extended. Now going into the Asian market last night, we saw not much movement at all. Very quiet last night, exceptionally quiet. So what does it bode for us today? Well, today we have very important news, especially out on the state side. We have the unemployment rates. We've got Halifax CPI results coming out soon, and we have the all-important non-farm employment change results this afternoon for the states. So stateside we've got a hell of a lot of news. We've got non-farm payroll, employment, unemployment rates, average hourly earnings, all coming out at 1:30 p.m. GMT. Then we have the Canadian, PMI results. And then we have factory orders, and then we have Mr. ECB. We have the ECB President Tricker speaking later this evening or this afternoon at 3:25 GMT. So, could it be volatile today? Yeah, sure could. We have non-farm payroll. Previous figure was 36,000. The forecast is 191,000. So they're expecting an increase. Could be very interesting. Okay guys, intraday, let's have a look. So you can see the huge movement to the upside yesterday after a bit of consolidation around the 1388 mark. Massive breakout. This breakout came on a previous bounce at 1384. Bounce to the upside. This is was relation to what Mr. Tricker said yesterday, and we've now seen another swing formed, and the extension, this on a 30-minute time frame now, is where the trend line stands as we speak. So you'll notice that during the course of the Asian markets, no higher high, so the high we have to see a break and close above 139700 for further extensions. The intermediate trend is slightly higher. You can see how the price has been putting in smaller swings, but still to the upside, even though we have this resistance level of 1397. So could we see a potential continuation of this? It sure looks like it. Momentum's sure in our favor. CTC is all in our favor, bar this hesitation that we've seen, the consolidation over the Asian market. So we should be looking for a break above 1397 or further extensions to the upside. If the news is not favorable stateside, we'll definitely see this showing through. If it is not favorable for the US, then we could see the euro really capitalizing on it. Okay, so as it stands now guys, look for a break above 1397 and close above it to see further extensions, or we could see a pullback, and then we should be looking at the bottom end of this little get together here on a 30-minute chart here, just above the 1393 mark is your first port of call, or the trend line itself here down, maybe down to 1932 and 1388, 1384. Those are the projected figures. Okay, that's it for euro. I'll be back next with the sterling against US dollar. Okay, let's have a look and see what sterling did yesterday against the US dollar. Daily time frame, you'll notice we're still in an uptrend. CTC is governed by blue on either side. We had a break above a previous resistance level back in November of last year, and then yesterday we saw a pullback to that line. So consolidation line, we had a resistance, breakout, pullback. Are we going to see a bounce? Pair needs to be trading above 16,2500 to continue with the momentum to the upside. Failure to do so, we'll see the pair just fall back down, and then we could see price or the trend line around 1620 being retested, i.e. the 20 period moving average. As you can see, it actually has a really great support line. So trading above that all important 1627, I think, will make it. So if you look at intraday 1627, there we have it on an hourly chart. So hourly chart 1627, got to stay above that. Fish tailing between each, up and down, up and down, up and down. But you'll notice that after yesterday's progression, we saw price fall over during the course of the day, and as we speak, that trend line, these swings lows, is being tested. Okay. However, we got higher swings to this side. You see that? That swings higher. Bar this breakout, this was the, I think it was the 38.2% retracement, and then we saw it bounce to the upside again. But it's got to stay above 16,2700 if possible. Has to. Try. Otherwise, we could see negative sentiment creeping in, and we could see price reverting back down to 1622 because we've been there before, and then further down to the likes of 1615, etc. So consolidation, 30 minutes. You can see Asian market not really doing much, but the swings are still staying to the upside. The 200 period moving average now is moving in to the upside of this to help us support. So we literally have some sort of squeeze occurring this morning. Those swings, we're now in this area now, this band as such. Okay, we need to see a breakout. So to get rid of all that negative noise and stuff like that, we need to see one of two things. We need to see a break of, in this case, the Asian high, which would be around here somewhere to start with. Okay, it would show you further swing to the upside, and then we could see momentum drive us up to here to 16,310, and ultimately way up here to 1630. Or the opposite could happen. We have a break lower. This trend stays strong. Price is unable to break higher. It turns over, and then we can see this area here, which is previous support and resistance, at just above 16,255 being the first port of call. Second port of call down here at 16,220, and then wow, we're in free fall then, literally way down here, 1609. Okay, so that's it for sterling. We'll be back next with the US dollar and Swiss franc. Next up is the US dollar and Swiss franc. Let me just pull up the daily chart. You can see that this is the, you can see how the pair has broken through 935 or 0.935 and literally came back and retested the other side slightly, and then pulled back down to the downside. But yesterday we saw the US dollar gain a lot of strength and pushed, and traded slightly, or traded almost identically to the previous high that we had on this candle here back on the first. So almost a small resistance level at that level. If I bring these ones down and use the wicks, it's literally on it. So you're looking at 0.933 area. There's resistance, and where there's a resistance level, we could see price fail to break it and then revert back to the downside. Great thing about this one is this candle here literally cancels out all this movement here, but for it to actually really stand out and you know, really be of significance, it needs to be trading above this 0.933 area. Otherwise, it's just hitting its head against prior support. Now this is becoming resistance, and we could see the US dollar revert back to the downside again. CTC is heavily red on either side. It goes for all the time frames, bar the hourly. This pullback, say 15 minutes, the 5 minutes, shocking. But you can see the consolidation after that beautiful extension for the US dollar yesterday. Great opportunity to get some great pips. And now you can see that trend. So the support area is 39310. This is a 30-minute, guys. You can see the trading range is very small. Okay, the Asian market, not much happened between 310 and 325, so 15 pips was the difference. Well, we could see price slam into that because it's a strong resistance level this now, and then revert back down to the trend line to start with, or ultimately back down to the 200 period moving average at 9280. Okay, resistance, you can see that very clearly. A lot of hesitation on the way down. So CTC extended, if this is to be bullish, it needs to break above 9325 or 9330 and remain up there. It's got to show us a really strong intent of upside movement. Otherwise, all we could see is price just reverting to the downside or consolidate, or remaining to consolidate during the course of this morning until the figures in the States come out, non-farm employment rate figures, and then we could see momentum, or we could see a change in market sentiment occurring. Okay, that's it for the US dollar against Swiss franc. I'll be back next with the US dollar Japanese yen. Okay, so US dollar Japanese yen. Let's have a look yesterday. You'll notice that we've had further swings to the upside. Strong resistance level, or sorry, support level at this area. And the US dollar really took off. A lot of indecision, and we need a decision candle, and sure enough, this is looking very similar to what happened way back in early February of this year. And now what you can see is the price still hanging on to the well, not much trading range in the Asian market on this pair, but it's still holding those highs. And ultimately what we'd like to see now is a break above the high of yesterday's candle of Thursday at 82.5100, and then by doing so this pair will be trading above its two intermediate short-term moving averages, and then we could definitely see a push to the upside for this pair. Intraday, you can see the CTC on a daily and a 4 hour is still very much red. You must understand we're still in a negative trend, but we are in a consolidating negative trend on a daily. You can see it's almost like a channel. The only good thing for this pair that's going at the moment now is the strong support level that we saw on 3 prior occasions on this pair, and all we need to see now is a close above yesterday's candle. This is a 4 hour chart. Didn't quite make it break above the 200 period moving average. It needs to break above that. So anything above this candle here at 82.50, 82.55 would be brilliant. Close above that area there would definitely confirm that we're now looking for further upside movement, because it's trading above a very strong moving average, a resistance level. You can see a prior support as well. So factor that in. The trend for this pair has been breached for this time frame. Okay, now we need to see an extension. CTC, we've got the first two correlating. We just need either side to turn blue. You can see that's occurring now on an hourly, 30 minutes and 15 minutes. Okay, so all you need to do is say to yourself, great, I need to be trading well above 82.50 or 82.55 for a definite confirmation breakout. Otherwise, just think of a huge, the 20 period moving average is here, and it's a ceiling level on a daily because the 20 and 50 are above it. Okay, so it's got to do a lot. It's got to have a lot of momentum to punch through that. It's got to have a lot of conviction to punch through that. And then if it's trading above that, then we could definitely look for further extensions to the upside. Remember, non-farm is out today, so it could be a factor in this pair. Okay, the US dollar and the Japanese yen are literally sleeping buddies. So when one does something, the other one definitely reacts. So the non-farm today could definitely be a deciding factor for this pair. Okay, that's it for today. Hope you have a fantastic day. Nikki and I aren't trading non-farm payroll. We never have. We don't like trading because it's just so volatile. But if it allows us to see further extensions or gives us clear indications of where momentum is going to be going for the next week, then great. Then we could take it there from Monday. I'm going to spend some time with Connor this morning. We've got some friends down here that we're working on some products with, and yeah, all that remains to say is have a fantastic day, have a brilliant weekend with family and friends, and remember, non-farm's out today and it can be very, very volatile. So if you don't trade for the sake of trading. If not, just watch. There's no need to trade just for the sake of trading. Rather just stand aside and if there's a potential trade, make sure you take your pips very, very quickly, because it's going to be volatile. Have a great weekend and trade serenely.